Well, AMP's recovery story is gaining momentum. The financial services giant has been slowly rebuilding its reputation and performance after its $5.5 billion loss 3 years ago. And this week it reported a profit of $915 million, an improvement of 16% on the previous year, and gave shareholders an added bonus, a 40-cent capital return. Sky Business News' Desley Coleman caught up with AMP Chief Executive Andrew Mohl after the result.
What are your ambitions now for AMP?
Well, AMP's come through a very challenging period. 3 years ago we announced the demerger. We've effected that. The business is growing strongly. We believe the Australian retirement savings system is an extraordinary opportunity where we have a world-class franchise here, and our focus is on meeting the needs of Australians around their retirement savings, and doing that in a more and more effective way over time and delivering greater value and returns to our customers.
Now, you mentioned the demerger. AMP did get into a bit of trouble expanding overseas. Now that the company's performing so well, are you not tempted to dip your toe in the water again?
Well, our strategic focus is Australia and New Zealand. This is our heritage. We've been in operation over 150 years. We have an enviable business model operating in both countries. Our asset management business is growing into Asia. It's a very targeted expansion. It uses very little capital. But we run AMP these days very much around driving shareholder value. I'm a great believer in the Jack Welch view: if you're not competitive, don't compete. So we have strong competitive capabilities in this marketplace. We're using those. That's meeting the needs of customers and delivering returns to our shareholders.
So where is your growth going to come from?
Well, wide range of areas. I mean, the Australian wealth management market is expected to grow well above 10% a year. And the analysis we've shown to the market indicates the post-retirement market will in fact grow closer to 16% a year. This is people turning their superannuation into income stream products. So, we're very focused around both the retail and the corporate superannuation opportunities. The insurance market, both individual and group insurance, are growing close to 10% a year. And that post-retirement market growing by 15% a year. All of those, AMP has a brand, has a capability that readily lends itself to meeting the needs of those clients. And what we have to do is continue to get better at the way we run our business, deliver more and more value to customers and better returns to our shareholders.
With regards to the super reform, when do you expect the floodgates to open?
We think the June quarter will be a very large quarter. Effectively, the opportunity to invest up to $1 million expires on the 30th of June. So if you miss that opportunity, you won't get that opportunity again. At the same time, the salary sacrificing opportunities, 50,000 for people up to age 50 and up to 100,000 thereafter, are also effectively use it or lose it. And so I think people will get advice. We will see significant flows next year after June. The transition from superannuation into pensions, where in effect the earnings can be tax-free, I think is going to produce another significant wave of activity. And the self-employed sector will also benefit from superannuation far more. And overriding all of that is really, I think, quite a significant change in sentiment in the community towards superannuation. They can see the benefits, they can see the tax advantages, and I think we are going to see superannuation increasingly the preferred savings vehicle for Australians, more so than property, which is, up until this point, Australians have had a love affair with bricks and mortar. That's all, I think, very positive.
Private equity made a major impact on the markets last year, and it looks like that activity will continue this year. Do you share any of the concerns of bankers and regulators?
Well, I think we view private equity as part of the cut and thrust of an open marketplace. There are lots of examples where private equity has unlocked lazy capital, put in place a more focused and effective management team, and delivered significant value to investors. There are other examples where it hasn't been so successful. So it's part of the landscape. I don't think at the macro level that private equity is having a material impact on the level of risk in the system. When you look, the Australian economy is $1 trillion economy, so it's extremely large. Yes, we're starting to see a handful of larger companies potentially being bought privately, but clearly the investors involved have done their analysis. They think they'll get a good return on their investments. There's a lot more leverage in those particular investments, but time will tell.
Any chance of a private equity group coming after AMP?
Well, theoretically, any public company can be approached and pursued by a private equity player. I think AMP's circumstances, its high market rating, its regulatory arrangements mean it's extremely unlikely that AMP would be subject to any private activity.
AMP was the company that investors put their trust in, and you have made some mistakes in the past. Is the recovery put down to good management or just good luck? Because the investment market and the growth in wealth management have been very good to you.
I think it's fair to say it's good luck and good management. We've worked very hard at reshaping the strategy of AMP. We made it very clear to investors in 2003 how AMP was going back to its heritage. We had a good core business in Australia and we're going to focus on running that business. As we've done that, markets have expanded, superannuation system has grown strongly and we've benefited from that. So it's certainly a combination of both.
So do you think AMP will win back its Australian icon status while you're CEO?
That's certainly what we're trying to do.
The ASIC rap over the knuckles must have been an embarrassment to you.
Well, we were disappointed. Companies like AMP, we hold ourselves to a very high standard and we didn't deliver to that standard in that particular case. But our customers and I think the community recognise that all large companies make mistakes. It's how they go about fixing them, the manner in which they do that and the speed with which they do that, and we've certainly seen this as a wake-up call. We've made significant reforms. We believe our business is stronger, the quality of our advice is now better, customers are getting a better service and our planners are better advisors for the training and support that they're now getting.
Okay, now you'll be in ASIC sites for a little while now. It's not really great or ideal. How long will you have this level of ASIC attention?
Well, we have an external expert that's working with AMP reviewing the progress that they've made. They've made their first report back to ASIC. We're encouraged at the progress we've made and what's in that report. So it's business as usual for us.
Chip Goodyear has handed in his notice at BHP. Now you're coming up to 5 years. Have you got any timeline on when you would like to move on?
Well, I'm very committed to AMP. I love what I'm doing. There's a time in the future when I won't be doing this job, but my focus at the moment is on making the business more and more competitive and successful, and I'm working well with the board in achieving that.